All right, good afternoon, everyone, and good morning to people joining from the US. Welcome to our webinar on future-proofing renewable and storage projects. So my name is Dee. I'm a project manager on Solarplaza, and I will help you introduce the webinar and help you understand how our little environment works. Perfect. So a bit about Solarplaza. We are 20 years old now, and we are kind of an events company, and we focus in the renewable space. And our main goal is to, accelerate the energy transition by sharing knowledge and growing our network. And let's say this webinar is one of that. It is leading up as well to our events. So Solarplaza Summit Asset Management in Europe. And it's one of our conferences that we talk about, all things asset management and where the industry really gets together and, we talk about the future and come up with really creative solutions. And yeah, if you'd like to join, we also have a discount for joining the webinar. You'll also get it at the end as well as by email, so do not worry. But I'm just putting it here so you see it. Okay, so practical notes. If we both see the same screen, if you have any questions, you will see on the top of your screen, there's a little question box. So you can put in all your questions there, write to which speaker you like, but we will have lots of time in the end to get to it. And we really do like all your questions because it's how, we push the industry forward. Any technical issues, you can use the chat box. So it's the box next to the questions. And yeah, I will be here. I'll be able to help you. My colleague Anna is also here. So any issues, we got you. And the presentation slides and full recordings will be available afterwards. So you will receive like an email. You will also, you'll get the discount code in that email and you'll get the recordings. All right, so a little bit about the agenda today. I've done the technical boring bit. We have Dr. George Hilton, who will take you through a bit of the introduction. And then we have Lars, who will talk about the European energy transition. Jürgen, who will talk about market revenues and bid optimization. And Sergio, last but not least, of course, who will talk about innovative technologies driving the future of energy storage. And lastly, there will be time for all your many questions, and it will be moderated by George with all the speakers present. So without further ado, I would like to give the floor to Dr. George Hilton. You may introduce yourself and turn on your camera, and yeah, take it away, George.
Great, thanks, Dee. Yeah, well, I want to say, first of all, well done to everyone for joining this webinar. I think it's going to be probably one of the most interesting ones on storage of the year, and I'm super excited to hear the presentations personally as well. What we're going to be talking about is change, really. Change is happening all across the energy storage space. I can't think of anywhere in the energy storage industry now that's not experiencing quite significant change. We have change in prices of assets, we have change in markets, we have change in the economics and the contracting structures of batteries, we have change in the products, we have change in the route to market and optimization side of it, and then covering all of that change, we have the kind of macro change of AI coming in from all directions and everywhere. So we wanted to kind of kick it off with a question on AI and on change. And that's, how soon will AI transform the renewable energy and storage space? So that should have popped up for you now, and we're super keen and curious to hear what you guys are thinking. Looks like we're kind of having some coalescence around 1 to 3 years. Half respondents are saying we've got to wait a year for AI to make a significant impact. I'll be curious to hear if our presenters today agree with that or not as we get into their presentations, because I think there's some AI already making changes in the way we operate batteries at the moment. So perfect. Thanks for that. 1 to 3 years is the conclusion there. I think that's probably quite a balanced response, actually. Thanks to everyone who's clicked there. Perfect. So kicking off with our theme of change today and discussion and presentation, I want to introduce Lars. Lars is like probably the person on LinkedIn to follow if you want to hear updates about energy storage. But apparently he also has a day job, and that's talking about policy and market and applications for energy storage in Europe. So we're going to be hearing about all the change in those areas in his presentation. So yeah, over to you, Lars.
Well, thanks, George, for the kind introduction, and also happy welcome from my side for everyone who's joining us for this webinar today. I will kick off this webinar with a view on, just want to get you move the slides moving, great. A view on the European energy transition. I want to lay a bit of groundwork, what the energy transition looks like in Europe from a perspective of renewable and storage deployments, so that Jürgen and Sergio then can take it away and tell us more about how technology will make a big impact on how we future-proof storage and technology, storage and renewable projects going forward. A very quick word about Fluence. Sergio and I work at Fluence. We're a global leading provider for energy storage solutions, services, and digital applications. Here on the slide, you can see a bit the numbers of storage assets which we have contracted or deployed, which we have under service, and as well as the amount of assets that we optimize, both with our asset performance management platform Nispera and our bidding platform Mosaic. Very important and core of Fluence is our mission, which is transform the way we power our world to create a more sustainable future. We do this by building, integrating, and optimizing energy storage assets for our customers. And on the next slide, you see why this mission is becoming more and more critical. And that is because the energy transition is exponentially growing globally. All of you will have probably seen slides similar like these, which show the exponential pathway on which we currently on a global scale have solar, have wind, have EVs and battery storage integrating into power grids. So we're really at the exponential beginning where we see a faster acceleration of these assets being deployed as part of the technology adoption S-curve. If we look more specifically into what that means in Europe, I brought here two data sets. On the left side, the amount of wind and solar that is going to be integrated into the European energy system based on the 2022 baseline going into 2030, which is the current EU targets for the integration of renewables. And we see that the amount of solar and wind assets deployed in Europe will almost triple between 2022 and 2030. If we then move to the storage side, we see even a more dramatic growth on energy storage, and this is just utility scale energy storage integrating into power grids. Between 2022 and 2030, the deployed capacity, so in gigawatt hours, will grow by a factor of 42. This means tremendous growth. Now the question is, of course, why is that growth in energy storage so much bigger? On the one side, of course, we're talking about a lower baseline, but we're also seeing as we integrate more and more renewables in our power grids, the need for storage becomes more imminent to make sure the power grids can be operated in a stable and affordable way. In layman's terms, if you have 20 or 30% volatile renewables going into your grid, it's easy to integrate them with existing system architecture, with existing flexibility in the grid. But if you reach a certain threshold, maybe around integrating 50, 60, 70% of volatile renewables into your power grids, the structure, the context of how you operate power grids changes, and energy storage becomes a key asset to enable this higher integration of renewables. What this looks like in practice is shown on the next slide, where I took an example from Germany, which shows the generation profile as well as the load curve in the German grid. I took a couple of days in the end of August, where you can see already today, like a couple of weeks ago, renewables and volatile renewables generate more electricity that we actually needed at that specific points in time in the German energy grid. Going forward into 2030, when we have more renewables on the grid, we see new challenges emerging. We see periods of time where we have a lot of renewables on the grid, but still also a period of time where we don't have renewables on the grid. And with this fundamental change in how our generation and demand balance will look like going forward, new challenges are emerging, and we need energy storage for this, and I'll dive a bit into this in the next couple of slides. The first one, and that is probably very obvious to many of you, is that we need to shift energy around. It's the simple application of taking solar power from the day, moving it into the night when the sun is not shining, right? It's energy shifting that we need to engage, both from a daily perspective, but maybe also we need to shift energy from the weekend to the week, or in a seasonal perspective. All of this will have to be organized by markets, maybe at local flexibility markets. It might be curtailment capture products, and it will be an optimization. When does it make sense to curtail renewables? When should we shift it in time, depending on the cost of storing this electricity and bringing it to the other time frame? So this will be coming a new optimization challenge that we haven't seen so far. Second challenge is the integration of renewables on a more granular basis. So when you look at those nice graphs, you see, wow, we have a lot of solar production when the sun is shining. But then if you actually look into the very detailed profile or generation profile of a renewable asset, you see cloud coverage coming over a solar farm, which reduces the generation output of an asset for a given period of time. You have large forecasting errors. For example, when the mist in the spring lifts later than expected, and solar generation just comes in later in the system. This drives forecasting errors, and there are different ways to deal with them. On the one side, renewable producers can have energy storage as part of their portfolio and balancing their portfolio themselves, or they can procure energy on continuous intraday markets, and I'm sure Jürgen will tell us a bit more about continuous intraday trading in a few moments. So this is a new challenge that we're seeing in the grid, where we're really talking about managing renewable integration and the balance of a renewable portfolio on a minute-to-minute basis going forward. The last challenge I want to talk about is the one of system stability. In the past, when we had a lot of conventional thermal assets in the grid, we had those big rotating masses, which came with certain stability functions, such as providing instantaneous inertia, providing short circuit power contribution, which all help to stabilize the power grid as it's operated. As we are switching the energy system away from fossil power plants towards energy resources, which are feeding electricity via inverters, we see new challenges arising in terms of how do we manage inertia? How do we black start the system in case of an outage? How do we ensure sufficient levels of short circuit power in the grid? This is where grid operators around the world are now creating new system stability services, new system stability products, where energy storage can play an important role. In the case of the UK, we have already seen with the Stability Pathfinder procurements a dedicated procurement for inertia short circuit power. In Germany, we're currently seeing procurement of black start services, and inertia services are also announced. So new applications will come to the forefront. Energy storage can bid into those applications, and this will, of course, increase the complexity of how we operate and maintain energy storage assets, because we're not only providing auxiliary services, energy services, maybe capacity market services, but also a whole new suite on advanced stability services, which come with different requirements in terms of capacity you need to reserve, in terms of power you need to make available, and so on. So the optimization challenge of energy storage, but also renewable assets, will increase over time as new products come to the market. On the very last slide, just to give a bit of an outlook about data, I just want to talk a bit about data availability and granularity. As I just explained, and I hope it's well understood, optimizing assets will become more complicated. Having data about your real-time asset performance becomes more and more important to optimize both the revenue generation of the asset, but also to optimize the performance of the asset over the lifetime of the asset. Companies like Fluence take this challenge by increasing the amount of data and the data integrity that we own and we can bring to our customers by, for example, buying battery cells on a sale level and integrating them from a battery cell level all the way to the point of common coupling, the point of interconnection. Having this larger set of data available to us and being able to make it available to optimizers and also to asset performance management systems will increase the output and the benefits that we can drive to from those systems. So data availability and data integrity will become more and more important in managing renewable and storage assets going forward. And I think this is a very interesting trend to look at. A last point on this, I think as more and more data about real-time data, real-life data about status of the energy system becomes available, the more and more we'll probably also see an increasing awareness around cybersecurity and data integrity and safety in its management. So this is also a newly emerging challenge for the energy system. Okay, with this, I'll hand it over to Jürgen and to Sergio to tell us a bit what we can actually do to drive new technologies in optimizing renewables and storage assets.
Awesome, thanks, Lars. I feel like everyone, whether you're interested in storage or not, can be interested in those charts that show solar generation across Europe that have been created in the last few months. They're absolutely stark, and they're only going one way as we look further forward. Right, it's kind of completely changing the system that exists today. So anyway, next on the stage, on the platform is Jürgen. Jürgen's from Enspired, and they are one of the most leading the forefront of optimization. And a bit of a spoiler alert, inside this presentation, we're actually going to look at a live battery optimization dashboard. I've never seen that before. I imagine most of the people on the webinar today haven't either. So yeah, over to you, Jürgen. I'm particularly excited to see that.
Thanks a lot, George. Thanks a lot, Lars, as well. So for the first presentation and some quite nice and interesting point, and also reflecting what George said before on AI-based optimization, or in general how AI is going to impact the future of the storage industry. So just take it from there. So we are, as Enspired, a fully digital energy trading service provider. So what we are doing is we are trading flexible assets, and we do this AI-based already. So just to give you a short heads up, we are optimizing in total a portfolio of about 5 gigawatts at the moment, and we do it fully automated based on our AI-based trading platform. And this is also the reason why I'm talking today about a revenue side and how to optimize. And I will focus today on storage. Reason for that is because especially storage is a quite interesting asset, because storage is a digital one. Sorry, jumped too far. So we are talking about always scalability and flexibility needed to get the energy transition done, and therefore we need quite nice flexibility, and storage is the nicest flexibility out there we can have. It's quite fast and it's available and it's scalable. The other side of this equation is, but there is a lot of things to consider to optimize the storage. Yeah, so you have a lot of different things, and also Lars was reflecting on that already, talking about a lot of different data points to consider to trade an asset like a storage, because we're talking about warranty conditions, we're talking about efficiencies of inverters, etc. We're talking about cycles, C rates, capacities, duration, etc., etc. And this all then leads up into a quite challenging trading topic, meaning that it's may not the best choice to trade it with humans. It's really something to consider a lot of data points now and even more in the future, which makes it a typical digital trading challenge. And all this also combined with the market side. So not only that we had a lot of data points just because of the asset type, it's also that we have typically more and more revenues we want to stack. And when we look about 3 years in the past, it was all about FCR, for example. Today, markets are more complex, or we can just use more revenue streams to optimize an asset. And I want to show you a bit more in detail how this works. So what you see on that slide is that we have there a day ahead market, we have a current day, and I just want to guide you through a bit how an asset optimization for a battery works. So first of all, you see there are capacity markets, which are typically done in an auction on the day ahead, so 8 o'clock in the morning for FCR and 9 o'clock in the morning for AFR capacity. Then what follows on the same day is the day-ahead auction, where we log in the first profile of the asset for the wholesale market and spot markets, and then you see the intraday auctions where we already starting re-optimizing the logged-in profile and going then down the timeline into the continuous market, doing really real-time and live trading of the asset till delivery, and at the very end also using the opportunities in arbitrage to AFR energy. To make it even more tangible, just getting a bit deeper into that, it was just the first slide as an intro. So let's assume we have our battery asset. So what happens first, as I mentioned, is on the day ahead, 8 o'clock, we log in what part of this battery we want to have on the FCR market. FCR is a capacity market, so this means that we also block a part of the battery, which is not allowed to be used for anything else. So it's really that we keep this part of the battery available for delivering the FCR part in case we are activated. What follows next is we log in at 9 o'clock, the AFRR capacity. It's an asymmetric product. I do it here on the example of Germany. Sorry, I forget to mention this. And this blocks a further part of the asset. Yeah, and this keeps us then with a residual part of the asset, or leaves us with a residual part of the asset we can then use on the wholesale market. And what happens then on the wholesale market? You can, or you just have learned on the first graph here, on the graph before, that we have there the day-ahead auction, then we have the intraday auctions, and then we put the battery into the continuous market. And now explaining already one quite important and significant thing here. It's not about just bidding something in FCR and bidding something in AFR and keeping something for wholesales, the auctions and the continuous markets. It's really about you have to have the full picture up front. So you have to have a good and clear understanding and idea about the market of the future, of the short-term future, that you can design the day before which part of the battery you want to block for FCR, AFR capacity, and which you want to leave for the wholesale part. Of course, you can also consider, depending on the market, that you put nothing into the FCR and put everything on AFR capacity and wholesale, for example. But for that, you of course have to have a clear understanding and idea of what the market will look like. And this is where also these AI-based capabilities came in forecasting prices and weather forecasts and all the other parameters which are relevant, not only from the battery perspective, but also from the market perspective. And what happens then finally is that 25 minutes before delivering this picture shows a battery till at 12 p.m. That we are doing arbitrage between wholesale part and also the AFR energy part. And this is exactly what I would like to jump into a live dashboard to show you a few more details about how this potentially could look like. So please also keep in mind the one chart you have seen a second ago, which was exactly this nice chart here, and I will zoom in here. So this is again what you have seen on the PowerPoint chart exactly for today. So what you're seeing here is now a dashboard of a 10 megawatt, 20 megawatt hour asset in Germany, 2 cycles. And you see here that we have here bid into FCR and the rest are here into AFR capacity, and the rest stayed for wholesales until now. So till short after 2, we already did some arbitrage between wholesales and AFR energy. So this is what I have shown you on the slides, which we call dynamic power allocation. And if you go a bit further in this dashboard, what you see here in this middle of the dashboard is that you see here, for example, the FCR part. So you see exactly for the blocks we bid that we reserved the part of the battery. And you see here this minor FCR activation which took place. But of course, we have to save a certain part of the battery for that. And you see till now, there happens then nothing again, and then at the end of the day we have reserved again a block of the battery. It's 4-hour blocks. Yeah. Jumping a bit on the top of the dashboard, you see also here the capacity, so the SOC of the asset over the day. So what you see here also like is the current SOC of the battery, how it was over the day. And you see it also where here this shading changed. The SOC of the future, and you see here a dotted line and a full line. And the dotted line is what we want to achieve with our trading strategies, and the full line is what is the current trading result. So over the next minutes, these things will get closer to each other. What you also see here on this dotted line is the part of the battery we saved for the capacity markets. And whenever we cross, like you see here, this dotted line means that the battery is traded in a 2 SOC range, which was kept for capacity markets. It exactly happens because of activations in the capacity markets. Then, of course, with SOC management on wholesales, we trade back into the dotted lines to stay within these borders of the battery we can use for wholesales. You see here also what happens on the AFR energy side. Due to a bit timely constraints, I just jump into one more detail, which is the wholesales optimization, which you can see here. And please remember what I have shared before, that, for example, we start on the wholesales with the day-ahead auction. So there we lock in the first profile, what we want, what we see at that point in time, and where we want to charge and discharge the asset over the day. And you see these initial trades here with these framed but not filled bars. These all are initial trading activities of the day which are not active anymore. All the trades which are currently active or have been physically executed are these pink bars. So this is what really then changed the SOC. And you see also here shaded bars in the background. These are all trades which were not locked in initially in the day-ahead auction, but which were re-optimized over the day and never physically executed. So these are just trades where we sell and buy power, which is not physically executed and is just making money for the asset owner. And the reason why these bars are so big, it's not why, or the reason for that is not that we are doing some kind of weird financial trades. All the trades which are done are asset backed. It just means that this position, this quarter hour, was traded more often. So it means that we sold and bought several times this quarter hour just to make money out of a trade, but without leading to a physical execution. Yeah. And when we go back, we also see there are some relevant numbers for that, which we call rebalancing factor 7.3. So this just says that we traded on this day 7.3 more, or multiplied by 7.3 megawatt hours then were physically executed. And what we did on this day with this asset so far is almost 3,000 trades. So this is also supporting this thing of trading an asset like a battery with all the different informations you had. It's not a human trading activity. It's a very digital aspect and a nonlinear optimization problem. This was it from the dashboard perspective. And going back now to the slides, I want to give you some more insights on what's next from the trade and optimizer perspective. So what is going to happen in the future is that at the moment we are talking always about maximizing the revenues within the warranty conditions. And by just receiving more data points of an asset, we can also talk about maximizing revenues with minimum degradation. And why it is quite an interesting challenge is because by considering also specific degradation information, it just leads to an exploding complexity to run all the models we need to trade and to train our trading systems. Up to now, it was like using 500 to 600 cores to train our strategies, and by adding degradation and cell-specific degradation information, just complexity is going to explode. But there is a good reason for doing that. Of course, to keep a steady growth of revenues we want to achieve for our clients, but even better and more important, to increase the profit, because by just doing the same or more revenues with less degradation, it just gives you a bigger profit. And this is what happens at the moment on our side. So developed our own solver to exactly solve this and to deal with all these new upcoming challenges of cell-specific degradation information, rolling SOCs, moving DODs, etc., etc. If you question yourself, and this is my final part then, how this all could work, because the important message here, what I mentioned, is keeping the same revenues, yeah, but doing the same revenue with less cycles, leading to a higher profit. And I have chosen a quite nice picture for that as a guy from Austria. So when we think about the Alps and how an optimization problem looks like, you see there are a lot of summits with a similar height, and the same is it for optimization. Yeah, so you can achieve the maximum revenue, which is here symbolized by the different summits, on a different way. And let's say and assume that, of course, we go up this very steep flank to the mountain, to the summit, but this means we're going there up to the max revenue within the warranty condition, because this is always the baseline. Yeah, but there will be maybe another summit as well with just a quite nicer path and way up. So meaning that we get up to this mountain and getting less stressed and with less effort. So we're achieving the same revenues, but with lower degradation, meaning especially also keeping your cell healthier, meaning you have a higher SOH, meaning you have more capacity in the future in year 2, 3, 4, 5, 6, 7, how long your asset lives, and having higher efficiencies. And so over the time, this will be a significant impact to the overall revenues. Not talking about year 1 maybe, but talking about year 2, 3, 4, 5, and beyond. So this is why this is a new way we see to optimize assets based on even more data. And with that, happy to hand over back to George and to Sergio.
Perfect. Thanks, Jürgen. That was about as interesting as I thought it was going to be, which is absolutely fascinating. It's great to get a reminder of just how complicated optimizing batteries is, and that dashboard certainly showed that in real time, which was great to see. So we're going to move on to Sergio now, and we've heard from Lars about all the change happening in the marketplace and in applications and in the data, and we've heard from Jürgen there around the change and developments happening around optimization. And Sergio is going to talk about how that's impacting what we actually need from the assets themselves and the change we need to see amongst the battery from the battery suppliers going forwards. So yeah, over to you, Sergio. Looking forward to the presentation.
Thanks, George. I think my takeaway from Lars and Jürgen's presentation was that the common theme was data is critical. I know Lars's last slide was data matters, and I think that's going to be the basis of the discussion further. So almost just a validation of what they were saying. My background is that I came from logistics and telematics company, selling large kind of platforms to large enterprise customers. And sort of 10, 15 years ago, that industry was in a similar place. They were trying to leverage data to make far better, far more informed decisions in their operations and the way they executed. And for them, these were very expensive, resources in the field. And data became sort of the critical path to very similar elements, improved performance and improved revenues, basically. And I think we're in the same very similar situation, in this space today. I think. Sorry, just changing my slide. So I think as we look at the problem, and I'm obviously discussing this from a Fluence-centric perspective, and I'm looking at the investments we've made as a business to try and address this and to try and bring those capabilities to our customers. I think we see it, obviously starts and begins with a robust storage solution that has data capture, data integrity at the heart of how it operates. As you saw with Jürgen's different scenarios there are so many different revenue opportunities for battery owners and operators. And each one of those scenarios will have a different kind of impact on the performance of the battery in the short term and in the long term, degradation and sort of quality of the asset. So having more data built into the architecture, being able to kind of integrate at the lowest level of the technology stack, I think will bring improved outcomes and will bring some of the deliverables that Jürgen was mentioning, which is improved lifespan of the asset, as well as delivering improved revenues and flexibility on the revenues for the folks that are operating and owning them. Sorry, I'm just coming to terms with this mouse. Sorry. Okay, so just some context and some background. Fluence made an acquisition in 2022 of a company called Nispera, which was an APM provider based out of Switzerland. Nispera's core business was essentially managing renewable assets, specifically in wind and PV, and it was their work, their kind of adoption of AI and data modeling, taking SCADA data from wind assets, PV assets, and really looking at the monitoring of that data to provide monitoring on performance, preventative maintenance, looking at how those assets are performing in different conditions, and how to help operators improve, the management and the operation of those assets, to do very similar things to ensure that the operators would get the maximum amounts of revenue and the minimum amounts of downtime and operational overheads that come with that. The extension now is into BESS assets, and we believe having this DNA, having this understanding of how you can leverage this kind of data into improving the lifespan of these assets is going to be critical in terms of how we take our BESS solutions forward. We also think as hybrid deployments and additional integrations, not just between the BESS data and third-party solutions like Jürgen's, but even third-party technology classes like wind and PV and how those interact together. We can see that there's going to be additional value there, and we think we're well placed to actually bring those benefits to our customers. I was recently at a customer in Germany, and we walked in, and the supply manager had two colleagues sitting with him. He had a colleague on the one side of the table, and he said his core function was to maximize the revenue generation of the BESS assets. And the gentleman on the other side, sitting opposite him, it was his core function to protect the asset. These were the sort of competing functions within the business, and that's, I guess, you've seen that played out today in some of the discussions. And I think this is where Fluence has quite a unique and I would say class-leading opportunity, in that data is the bedrock of the data modeling, the AI, the behavior of how these assets actually perform under different conditions, under different revenue generation scenarios. And having that data then allows you to generate the various sequences and alerts and capabilities needed to actually bring improved state of charge. So if you think of Jürgen's dashboard example, he was showing how operators could use their software to reserve power for trades in the day and that sort of thing. They have to operate within the constraints of the warranty and the state of charge, and they have to a certain extent, they have to provide quite a significant buffer between the actual state of charge and what they understand that to be. And if you can improve using data, using the technologies that we're talking about today, if you can improve and minimize the tolerance levels that you have to provide to stay within the warranties, that creates revenue generation, additional revenue generation. It creates, more fidelity in the decisions that you're making day in, day out on the trades. It also provides additional assurance that in the long-term degradation of the batteries, you're going to operate within the operational limits, and you're going to be able to sort of analyze the usage patterns and how that's going to impact future degradation positions within the assets themselves. So harnessing the data and building, I guess, a data first or data centric architecture within the technology is critical. As we've said, if you start building, the BESS and the storage systems themselves to live in a world where they're going to be expected to provide high levels of information, detailed levels of information in real time, so that you can then, bring some of these additional capabilities like portfolio visibility, portfolio condition, even not just what's available, but what is the condition of the asset at that specific time. That will then help drive things like issue identification and allow customers and operators to then get ahead of their maintenance and their planning sequences around, how do they actually maintain sort of maximum uptime, maximum best state of the asset, so that they can improve, so that they can climb Jürgen's mountain in an easier way, as he put it. So if you have this level of information coming from the asset itself, you can improve things like state of balance. You can improve, which will then in turn, drive improved state of health over the longer term of the asset. Again, I think that as Jürgen was saying, the goal is to maximize revenues and improve the operation conditions and the operational state of the asset for many, many years. And if you have more information real time feeding optimization solutions like Jürgen's, those technologies can then make better, more informed choices, which will lead to improved revenue or more flexible revenue, and ultimately will also then lead to better state of the asset over a longer period of time. So that those are one of the, I guess, key areas where we can see additional real-time data feeding third-party systems, whether those are optimization or they could also be like in hybrid models, as I said earlier, with additional technology classes like PV and wind. That additional context will bring more value to the customers that are operating them. In closing, just wanted to say, we think that if you're looking to operate a BESS asset which is generating significantly more levels and more detailed levels of data than the traditional PV and wind, then you absolutely have to build an ecosystem that provides almost, like I say, almost provides the expectation that the data is going to drive the usage experience, the way you manage and operate the asset itself. You have to build the operational teams and sort of sequences around how you operate the asset based on these new capabilities. So, creating expectations that you can actually, leverage the data that's available in real time, look at the, behavior patterns, predictive maintenance, look how that can improve safety, look for specific alerts, specific, conditions within the assets that will then create, downtime scenarios, that sort of thing. You can identify those with the additional data, and you need the operational teams and services to be built around that. And then finally, have the software, have the digital solutions and services that will enable those capabilities. So, Nispera, for example, is an APM that's more of a performance analysis monitoring solution. But solutions like Jürgen's are also there, designed to optimize the revenues for operators and for customers. And if we can have more detailed integration, more real time, almost enable their decision making, help enable their decision making, and help their models and their algorithms to determine the long-term impact of the assets in those decisions, then that will lead to an improved overall situation for operators and for people running these assets. I hope that's been somewhat helpful. Like I say, I think Lars kind of teed it up in terms of the complexities and the changing nature of these assets. And I think Jürgen gave us a good example of how optimization solutions like his really maximize the revenue opportunity, but also demonstrate the complexities and how those are driven by revenue opportunity in different markets. With that, over to you, George.
Great, thanks, Sergio. We've got 15 minutes left now, so please send in. We're having a bunch of questions coming in super quick already, but we've got 15 minutes now to address them all as they come through. So please do type any questions in if you have them. I'm going to fire off one first for Jürgen. Sergio talked a lot there. Oh, shall we all turn our cameras on as well for the Q&A section? Sergio talked a lot there about real-time data and how real-time data is available from the best in class of the asset providers, I guess you could say. But I'm curious, how does that affect the way that you might optimize that asset if you have availability of that real-time data coming from?
Thanks for the question, George. So I would start by answering like what was the past and what would be maybe the nice future of really getting real-time data of the asset. Because when we optimized, or how we optimized up to now, or where we have let's say at the moment a new areas coming for real-time data, we optimize an asset based on the warranty conditions which we received, and of course the market. And why I was talking about degradation information, it was also like what is already considered in our strategies is like based on just the pure information about which cell type is used and which specifics have these cell types. For example, like there is a different value of degradation by just running a cycle between 20 and 40% or 20 and 50%, or running a cycle between 70 and 90% SOC of the battery. So this is something which we consider in like kind of static information upfront, because we know which technology is part of this asset. But by getting additional to what technology is in, also the real-time data of the asset, meaning like how does this asset feels like, so like temperatures, a lot of other information which tells me just what's the status of this asset, and considering this information exactly for these decisions of where do I run my cycles when I want to run a cycle for trading, in which SOC ranges, etc. So if this all is based also on a live integration of information, I would strongly argue for that it very much also helps to keep the degradation of the asset, for example, lower, meaning on the other side, by staying still with max revenues, that profit increase. So I would say it has quite a positive impact for the asset owner by just having a real life integration between the data and of the data of the asset and how the asset feels and what we are doing currently on the trading side.
Love that idea of how the asset feels. Cool. I'm going to switch back to you now, Sergio. The questions around, I'm going to embellish it slightly. Lots of these assets, they look expensive, right? How do small companies or startups, how can they kind of benefit from these assets in the same way that larger companies could, that have a lot more resources, for instance?
Good question. So I think specifically, I guess, with regards to the technologies used that we've mentioned today, the APMs, the optimization solutions, technologies that allow smaller customers and big customers to get, almost sort of equivalent access to these, data centers, to these algorithms, to the sort of IP and the experience that the solutions bring. I think it's kind of a typical principle of software as a service. you sort of take all those kind of barriers to entry, all those big investments, all that infrastructure that you have to put in place, that computing power that you have to put in place to run the data models and run all this information. So I think, this isn't exclusive to large companies anymore. Smaller IPP, small companies with maybe this is all that they do. They focus on a few key assets, a few BES assets in their specific markets. That they can leverage these capabilities as easily and as well as very large multinational utilities, which might have bigger, more focused teams on this. But ultimately, they can get the same benefits.
That's great to hear. I think it's a critical next stage here, right? We've had a bunch of questions around AI, as expected. It's like the topic of the year of 2024 AI year. I want to kind of go back to Jürgen though. I asked that question at the start: how quickly will AI transform what we're doing in renewable energy and storage? How did you see the answers? Did you agree with them? Do you think it's happening now? Presumably you do, right?
Yeah. I think, as I mentioned in my first sentence, it was like a quite nice opening for us because we are AI-based trading company. So it was more or less part of our founding decision to really count also on AI. We take this quite serious. And do the max what you can do with it, I would say, at the moment. So we are having, of course, I would say what a lot of some companies may already do, taking AI also into account for calculating all your forecasts about weather, price models, whatever you get as data you can bind on. We of course build a lot of models on our own AI-based models, but we also have reinforcement learning and machine learning already in place to train the models. So I have not explained in detail today how it works, but we have seen like that there happens something on the day-ahead market, intraday markets, etc. And this is all real time at the end. It's really then in the intraday continues on millisecond basis. But what we do to train the models, we really do something like for a single asset based on their sales specification, etc., like more than 1 billion model runs based on AI technology, to just explore what is the best trading behavior, selecting the right parameters, and boil it then down to like something like 10 million runs per day, which is then ending up in 10,000 and more runs on a millisecond basis. Yeah, and this implies also that this has to be super fast at the end. Yeah, and so AI is already there for us, and I think it will have a quite bigger role in the future, of course, because just out of the sheer amount of data which is there and you want to handle.
Yeah, we're all customers of NVIDIA now, right? Cool. I'm going to throw a similar kind of question over to you, Sergio. Is that the case on the asset side as well? And like, how is AI and digitalization more broadly bringing efficiency and lifetime gains for the asset?
Yeah, for our side, it's very similar. I think it's the same experience. I think certainly on the PV and the wind, renewable asset classes, there is a lot of data out there. Those assets have been deployed for a very long time. I think the general level of understanding and leveraging AI in those data classes is reasonably mature, I guess. On the BES side, there isn't that much data out there. I think this is where Fluence feels like we have quite a strong advantage in that we have so much of the storage asset class deployed, and we leverage it heavily in our own data modeling and in our own sort of AI strategy as well. So the AI, I guess, is going to only be as good as the data that's out there, and we leverage that heavily on multiple markets, multiple usage scenarios, many years of gigawatts of BES assets that have been deployed.
Cool. Yeah. Great. AI everywhere, as can be expected in 2024. Awesome. So that was a bunch of the questions. I kind of bundled them into two there around AI. There's a whole load of questions as well around revenues and how those are looking at the moment and how that's affected by the software and the for the storage asset. kind of ask it bluntly, how much does storage earn today in euros per megawatt hour, let's say? I'll leave that open. Maybe Jürgen first, actually.
Yeah, of course. Yeah, happy to answer, and I would just give my answer, put it a bit into context. Yeah, because I think it's always quite difficult to just shout out a number at the end, because we are talking about what asset are we talking about? 1 hour, 2 hour, 1.5 cycles, 2.5 cycles, 2 cycles max. What's the availability of the asset, which makes a tremendous impact, of course, on the revenues. And there is now, I would say, closing also the loop a bit, like as more you take care about your asset and the higher the availability is, and as you smarter you do your operation and maintenance planning, for example, yeah, this has a big impact on revenues at all. Yeah. So there is a lot of different parameters to consider to answer this question, but to just, of course, also give away some numbers, which is, I think, important to give some rough estimates. So in 2023, there was a quite good year for typical 2-hour storage with 2 cycles max per day, and there was, depending a bit on the availability you have for the asset and how you plan your maintenance and all these kind of things, were quietly nice, above 300,000 euros per megawatt per year, which was quite strong numbers. We see in 2024 similar, but not exactly the same. So I would argue also still that we will reach some 300k plus. So there is quite good years for assets. What you have to see, of course, is like the current assets, most of them are still not 2 hours, 2 cycles. So because the most of them deployed assets, at least in Germany and also in other countries, are below that. Yeah. So it's always, you have to consider what is your asset and what have you planned. To just take the numbers I just shouted out, it may be completely different. And I could talk now maybe for 10 more minutes about these things, but I will not do otherwise. There is no room left for other question, but just last statement. I think there is a lot of forecast providers out there, and it's already the time where you can get quite good information, like from the forecast providers, plus an explanation what an optimizers like Inspired can reach on top of it, because these are all things which are discussed. So you can always explain the deltas and say forecast providers saying you 150, 200, 250, what could be expected value from an optimizer and what's the difference, because how we consider intraday continuous trading is quite different than a fundamental model of a forecast provider.
Mm-hmm.
And so if there is questions around that, happy to answer that in more detail, but it definitely takes more time than 2 minutes.
Sure. Yeah, as with everything, it's complicated, right?
Yeah.
Shall we try and, I mean, there's so many questions here coming through. Should we try and speed run some through? We've got 2.5 minutes left. One thing I'm curious about, I'm not sure who's best to answer this, but why is there so much difference in revenues? You have some batteries earning barely anything, some earning way more. Why is there such a spread? I don't know.
I can go
You
first,
again.
but so first of all, I would argue it depends on the optimizer. So what we have seen in the last years, and I think it's true for every market, and it's a bit tricky because it will be different for the Netherlands, for Belgium, for Germany, for Austria, whatever we're talking about, Poland. The market structure is different. So it really depends on what revenues you can stack. And what we have seen over the last year, of course, especially like taking Germany's example as well, again. So in 2021, even 2022, it was all about FCR revenues. Yeah. And there, when you started to stack revenues, and even if you have like a 1.5 hour duration asset, whatever, and you stack then wholesale plus FCR, and then you bring in FCR EFR capacity and EFR energy on top of it, you tremendously increase the revenues of the same asset. So it's really a question of which revenue stacks you use and how smart you do it, and you will definitely make, there's a difference of 50 to 100% maybe, yeah, between optimizer, AP,
Fascinating.
whatever.
Yeah, between the best and worst in class, it's crazy.
Yeah.
I mean, we kind of got the sense of how complex it was looking at a dashboard, right? Perfect. And next one, I'm struggling to pick here. what about cannibalization? Is that a risk and on the revenue stack and going forwards? I don't know, Lars, if you want to take this, it feels in your ballpark.
Sure, I'll quickly take this. I think there's always been for a long time been discussions about saturation of FCR market, for example. And before what we heard from Jürgen, no batteries fully going to the FCR market, right? And it bids its opportunity cost compared to what it could earn elsewhere. So I think from a cannibalization risk, of course, every additional battery reduces the maximum spread. On the same time, batteries coming in going forward will be cheaper, but also the volatility in the market increases because of more renewable assets going into the market. So I think actually at the moment we see big numbers of projects announced in Germany, but the renewables are just going ahead faster. So I think for the time being, I honestly don't see a risk of cannibalization because the problem in the German system or European system through renewable generation is just getting larger. And storage is only addressing part of the problem yet, which is still getting larger. At some stage, there will be cannibalization for sure, but probably not in the short and medium term.
I think that's something we definitely agree on there, Lars. The outlook for renewables is kind of crazy. It blows my mind still, 10 years later. Perfect. I think we're out of time there. So I'll guess I'll say thank you to everyone who joined the webinar today. I hope you found it super interesting. And thanks to the speakers today. And I'll pass it back to Dee, who I think's got some closing words to say. Has Dee got some closing words to say? Or are we done?
Dee has some closing words, but they're really short. Yeah, just to say thank you to all the amazing speakers and George for being our moderator. And we have a whole load of questions. And if you want to answer them, you can come meet them at our conference, I would say as well. And we have a discount code to share over here if you're interested. And we will also, for everyone who's asked us about the slides, as well as the recording, you will receive them tomorrow. And yeah, you can go over this and enjoy it in your own time. But that is everything from our side. Thank you to, once again, to our speakers, everyone for coming, and have a good afternoon.
Thank you.
Thanks, everyone. Bye.
Thanks.
Bye.